Good morning, traders. It's 16th October 2015, 8:30 a.m. Welcome to Justfintech ProAMT Traders Digest. Let me go through the disclaimer. Trading futures involves substantial risk of loss and not suitable for all investors. This video is for educational purpose only and not a recommendation to trade. Please consult your personal financial advisor or do your own research before taking any trades based on the levels discussed here. We are not responsible for any losses arising due to trades taken on the basis of these levels. The information in this video is in accordance with the terms and conditions, risk disclosure, disclaimer of justfintech.com. The SGX Nifty is trading at 821025, 20 points above yesterday's closing level. We saw a nice run up in S&P 500. What I was expecting is we go above 2015 and check for sellers there, but it actually found acceptance above 2015, and if it stays, if it manages to push above 2023, we can expect around 2038, 2045 levels on S&P 500 futures. So, in line with that, if the same thing happens on Nifty futures, we may be able to push above the recent highs and go above 8250 and see whether we can stay above that or not. So before going into the Nifty and Banknifty charts, I would like to go through few sectoral indices and see what the sectors are doing. So this is the CNX Auto. The CNX Auto has been trading sideways, same like Nifty, since past 6 days. And yesterday it broke out. There was it's a P-shaped short covering profile, and the value developed completely higher above this balance. So Auto looks like rallying further. If it can hold these levels, it may again rally above the value area high. The CNX energy is still within the balance. It is still within that 6 day balance. Tried to break out, but has still closed on the highs. So, if energy also is able to push above this highs, that can also have a fair chance of a rally. The pharma index has been lagging. It broke down below this 3 day, 4 day balance, and yesterday also could not push above this virgin POC and again started falling. So pharma is one of the indices which is weaker. Then we'll come to the CNX Finance. The CNX Finance also tried to push above this larger balance and is trading just on the edge. So CNX Finance may also try to break above this balance. CNX FMCG is again same like pharma, has tried to break down below this larger balance but could not and is still within that balance. The CNX Infra is, it has just broken out above the balance, but the value is still overlapping. So if it manages to break up above the value area high of yesterday, that may also start trending towards the upside. CNX service is lagging. It has broken down below this balance, below this large balance, and then it just like has closed on the edge on the lower side. It may try to push up within that value, catch up with this virgin POC, and try to again re-enter this large balance. CNX Media has given a breakout. It opened in imbalance below this huge larger balance, but was able to push through the value and again break out above the highs. So CNX Media is one of the trending indices in the whole pack. It has rallied the most yesterday, and again, it all depends whether it can push above these highs or not. If it enters this larger balance again, it may the trend may come to a pause. The CNX PSU bank is within that larger balance, so that is also a bit lagging. So there are like three indices till now which are lagging. The CNX I went down from this larger balance. So from the results day of Infi, actually it has given a breakdown. It has broken down from this whole balance and is almost near the September lows. So if it is not able to hold these lows, it may again push down below this, which will be very weak. And if it manages to hold this zone, so in fact, if it manages to hold like around 75 points below yesterday's low, then it may again try to push up within that balance. Otherwise, it's looking very weak. The CNX metal was trending since 29 September. It was continuously making distinct, clean profiles and did not overlap at all. Finally, it entered, has been trying to balance out since last 4 days and is trading within this balance. So CNX metal might decide to carry on the trend further or break down below this 1837 levels and then again uh, hit all these virgin POCs which are left. CNX consumption is in a big sideways move from 6th October, 1, 2, 3, 4, 5, 6, 7, and 8 sessions. So, uh, or even 9 sessions. It's 9 sessions of balance. It's in a very narrow range. And below this 34880 zone, that may also become weak. So, in a way, 50% of the sectors are showing strength and 50% are still lagging. So there is no clear sign of all the indices going higher from these levels. So there may either be a sector rotation, the laggards may pick up if Nifty has to go up, or else even the trending ones may come down and push Nifty down further. So now let's see what Nifty did yesterday. We got a gap up open above the previous day's high. So it was an imbalance open which just tested the previous day's, a day before yesterday's highs, and did not find acceptance below and instantly broke out towards the upside. After this break up, uh, till 8203.20, there was a big sideways move. It did nothing, rotated in a very narrow range with the developing POC again chopping, going in a zigzag manner. So the developing POC became very bulky in this zone because it just rotated within this narrow range, tried to again two attempts to push above the IB high. So this attempt was able to push above the highs, but again found sellers there. It did another attempt again post 2 o'clock to push, could not push above the day high, though it managed to push above the IB high, could not manage to push above the day high and got sold off from there. When it got so this was the level I was not comfortable in getting any intra trades also yesterday, uh, apart from this one breakout trade. And then this was the one where I got to trade, because when you see that it is not able to push above it, it's a volume spike. So it gives a comfortable level to short, because there is that upper balance VL just there, and a short is a better idea just below the VAL, because the risk is very low compared to going long. I was expecting it to push below this 6165 zone, because that was this the opening prints started from there, though the printed open was 8141, the printed low, but the opening prints were here. So I was expecting a push below this, and if it had pushed below that, then the shots might have gained further, but there was no selling below the low it made, and in fact later on found buyers to close at day mid and day developing POC. So what we saw is the sellers coming at the highs and pushing it down, and these the stuck sellers. So these stuck sellers came in exactly when it pushed down below, and hence we could not go further below this. So what we can expect is uh, this to be a very important level. It's a HVN as well. This line actually dividing this 2-day balance and yesterday's auction. So what we can infer is we can take 8160 as a bull bear zone for today, if we can stay above it, or if we can push below that. So we'll go through the hypos that I'm expecting to play out today, but let's see what's there on the options front, because I was just going through the option chains yesterday, and I just saw that the PCR is still at 1.26. The PCR of the open interest across all the strikes in Nifty is still at 1.26, and the volume based PCR is at 1.09. 8,200 strike still has the PCR at 0.54 and 8,300 at 0.20. So there are two scenarios on the options front. 8,400 is looking like a very good resistance on the OI table. And if during the opening or in the pre euro session, if the 8,200 and 300 PCR can pick up, then we can see we'll see that maybe this rally can sustain, and maybe we can push above the recent highs. But till the PCR doesn't catch up, there are chances that those guys are still not willing to give up on those levels, and they are still resisting. They are going on writing calls beyond that, so that it doesn't push above. But a push above the highs and this PCR increasing may force them to cover the call shorts above 8,300. Though I am not expecting it to go much beyond that, because 8,350 is again a very important reference. So all depends on how we shape up further in the day, because the breakouts are not a good point to go fresh longs. uh, as I had mentioned yesterday also, those who are carrying longs from the previous day lows is quite safe, because that 8090 was very near as a good reference point to have a stop loss. But if we go long above these levels and create fresh longs here, the stop loss will be very wide, because the only known reference points where the auction might try to push back and then again start trending up are a bit far away when there is a breakout. The FIIs are actually doing on a month-on-month basis. This chart is on a daily basis, and these thin lines are the averages of 30 days. So that gives a picture of what is their average uh, on a 30-day basis. So that's almost, though it's not exactly a month, because there are two ways of looking at it. Either we see it on expiry to expiry basis, and I have been putting those posts for expiry on expiry basis, how the institutions are doing. And this is on a daily basis chart with a 30-day moving average. So actually in these 2 days, the FII positions went to touch the 30-day moving average, but then it's been trending up after the expiry. It's been trending up. Yesterday, last 2 days, it tried moving down, but it's still even uh, above the zero line, and it's in the positive zone. The clients started actually buying last 3 days, and again yesterday they have gone short. So this up move is actually led by the FII buying, because they are writing puts also and buying few calls. So the open interest actually added on the strikes above 8,200 can also be the buys. PCR is just a way to analyze, thinking that the option players are always on the sell side. Uh, but when we go inside that data and when we see the participants data, how they are placed, whether actually they are buying on those strikes, though we don't know on which strike that has happened, that we can just see the open interest, whether it has increased or decreased. But on an aggregate, we can see whether they have gone long more or short more. So it was just, I wanted to show this so that along with the technical aspects, we have an idea what the data is doing, because this also plays an important part in the Nifty movement. So again, we'll come back to the charts. So this is a long-term profile that we had been watching all these days, and now I've put in a fresh balance here. So this is actually a balance within the balance, but still gives an idea what the auction did when it went down. So from 13th, 14th, and 15th, we have a minus development here. So it again matches this 8160 is the value area high of this developing balance. So till we don't go below that, there are chances that we rotate between this and 8240. That can also be an option if we don't break out above the highs and sustain. The scenario can also be a very grinding move between these levels, 8160 and 8255, 8260 levels. If we push, uh, as SGX is pointing to a open just above yesterday's high and like between these levels, so what may happen is we may push above this and go to break the high, because the high is a poor high. We also had a failed auction here, and it's a poor high. So it would be better if we get some excess above that and then start falling, instead of so what is important is we carry all the nuances created every day. We note it down and we keep on carrying it forward till the best probability which we can point out is getting executed. So uh, the 8090 is also one of the important levels. Then again, this poor high is also one of the important levels. It is not that it can be revisited the very next day. So next day when we see a breakdown below the value, we do not anticipate a rise just because there is a poor high left and we need a revisit. But what we do is we keep in mind that there is a poor high left, so obviously there is a poor high and it may be repaired at some point of time. It is not necessary that it gets repaired the very next day or within 2 or 3 days. So we keep that in mind, keep a note of that. But also, the main thing lies in seeing what is developing currently. We are not interested in what has happened and what might happen just on the basis of our assumptions. It's better to go by the developing data and have hypos as per that, and just react to what market is doing in the now. And that's the one major advantage of auction market theory. And no matter what you follow, market profile, the TPO based market profile or volume profile, or just order flow combined with conventional analysis, but all point to a same place, that we are actually reacting to the market generated data. We are not assuming or we are not predicting what may happen. Instead, we react to what happens and take a position based on that. So I'll I'll go through the Renko once to see how the rotations happened yesterday. So we opened a gap up, rotated in this range, this narrow range for a while, to finally have a big rotation up towards the day high. Once we put in this IB high, we again rotated in this narrow range, pushed above that, again a narrow range chop, and then finally a push to the day mid. So we had been seeing this every day. This is the reason I use this Renko, because either we could have drawn a profile around this. I'll just draw it and show. So see, everything boils down to the same point. So either we draw a profile around this to see whether we are able to push within this balance or not, or we have this early reference of the day midpoint. If the auction had to go down, it has to get acceptance below that, or has to get acceptance below this POC of this morning value at least. And both of them didn't happen. So anticipating further downfall just because it has fallen down sharply would not help. Though this rotation down was fierce enough that I expected to push it down further, but it did not push down. So what I had to do is what I generally do. I use a 160 tick Renko chart along with this, just to see, because a Renko chart gives you the direction. The bars are made in the directional 8-point move. So the 16.2 bar setup is what I use for day trading. And when my order gets executed for a buy or sell, what I try to do is exit the part at 16 points. And again, the part booking, whether it's 50% or 25 or 75 or at times 60, that all depends on the conviction I try to bear in my mind of what it may try to do. So everyone differs, even after having the same levels. The position sizing and the risk may differ from person to person. But what I am just telling what I do. So take off 16 points, so that at least even if the stop loss hits on the rest of the quantity, you still have that the stop loss money you still have in your pocket already. So coming to the high pose, what I'm expecting is we open above this high and then try to push up into this range. So push up into around 8225 zone and check for selling interest there. If it gets sellers there, it may push back till 8190 and again start going up if it finds buyers there. This can be a likely the most likely scenario here, that it because it has all the chances on the daytime frame. It has rejected the lower balance and has tried to enter the upper balance. So on the daytime frame, it has the buyers have a very good chance here to break above the recent high and see if it can get acceptance above 558260 levels. uh, the second scenario is it opens here, finds sellers at open when it tries to push above, and then pushes down to 8190 and again chops there and pushes down to 8180 and keeps on pushing down to 8170. It will be a bit difficult to push below this. So the sellers have to be really aggressive to push below this level. And then finally, if it manages to push down below 8160, then we can see it continuing further down. Let us go through Bank Nifty now. So Bank Nifty in the opening minutes only gave a nice pullback, did the same thing, opened above the first prints came above the previous day's highs and instantly pushed. Actually, it went above the recent high, if you can see this. So pushed above this but got rejected there. So same case like Nifty, could not get accepted above the recent high and then started chopping in a very narrow range. Finally broke down. What I was looking at is a break below 17,750 because that's a developing weekly VAH, and was looking for a push below that to go short. Normally I don't trade Bank Nifty that much, and was going to short below that. The move was like very quick. Uh, Initially, it was not ready to break that 17,750, and when it broke down, it broke down instantly. And that was not kind of level where you can just put a hard limit order that if it breaks that by one or two ticks and we go short. So I missed that opportunity to go short. We'll see Bank Nifty's movement on a Renko. So nice rotation up, a very symmetrical move up in a zigzag manner till the highs got rejected off the highs and entered the developing value. Again a chop there. So here what we can do is actually this is the balance zone. This is the upper balance zone. So draw a custom value area here and see, look out for a break below that. So see this, you can see a Gaussian distribution curve, and if it breaks below that, uh, we can expect a down move. And it exactly, if we can see, this break was with a spike and then it did not push through the VWAP, so went down, started chopping below, and we have a kind of double distribution on the volume. Now, what we can expect today from Bank Nifty is it opens around 17,780 or 17,800 levels and tries to get acceptance above this high. tries to go push beyond 17825 and tries to get accepted there, and then starts going up further if it gets acceptance. And the other scenario is it opens here, tries to push above, finds sellers there, and then starts pushing down. Again, when it starts pushing down, this 17730 would act as a difficult level to push beyond. And if it manages that, then pushes till 17650 and then 17600. Again, it has to find acceptance below this to go down further. So it's the same scenario like Nifty. We are forming balance within balance within balance. So it's going on. The move is becoming more sideways till we don't get a clean breakout above the balance high or below the balance low. And particularly in Nifty, what I will look at is this, the value of this gap. So the level that I have been mentioning, the 8255, 8258 and 8260 is actually the POC of this gap area. When we gap down here, and it is the POC of that balance. So once we get accepted within the VL of this, uh, what I'll look at is how it reacts to this POC. And it may also happen that it goes up to touch the value area high of that balance and then gets rejected. So I would not like to preempt anything till I can see what is happening and what it is doing there. So better is to react when that happens, not to preempt that okay fine, it will go till 8255 and definitely get rejected. It's not sure whether it gets rejected or not. It may want to get accepted there and start marching further towards this 8370 zone. So better is to look at what is happening there and then react to it. But on the day time frame, uh, we are marching higher. And for those who look at balances in the way I look at, uh, I would not enter a buy until we are getting accepted above this long term VA. So that's all from me for today, and have a profitable trading day. Thank you.